What do a wind farm in Patagonia, a green skyscraper in New York, and a solar plant in the Sahara have in common? They were all made possible by one thing: green finance, money with a climate mission. But what is green finance? How does it work? And why are banks, investors, and governments suddenly pouring trillions into it? In this video, we are going to cover what green financing is and how it works. Stick around. We've compiled the top tools, dashboards, and reports to help you dive deeper into green finance. Let's break it down. Green finance is any funding, loans, bonds, or investments that supports projects with environmental benefits. Think clean energy, low-emission transport, sustainable farming, green buildings, and conservation. It's not charity. It's smart capital flowing to climate-positive outcomes, and it's growing fast. What if your portfolio didn't just grow, it made a difference? That's ESG investing. E is for environment. Is the company cutting emissions? S is for social. Does it protect people and communities? G is for governance. Are leaders transparent and accountable? ESG isn't about feeling good. It's about long-term risk and opportunity. Today, ESG funds manage over $35 trillion globally. Because doing good can also mean doing well. Green finance didn't start yesterday. It's decades in the making. For the first time in 1992, sustainability hit the world's economic agenda at the Rio Earth Summit. Climate wasn't just a science issue, it became a finance issue. In 2007, the European Investment Bank issued the world's first labeled green bond. Debt funding, but for climate-friendly projects. A real bold move. The World Bank joins in 2008. With their green bond program, structure and credibility followed. Investors now had a blueprint to back environmental solutions. The Paris Agreement turned out to be a turning point in 2015. Climate finance became central to the global response, with trillions needed annually. The tipping point comes during the 2020s. ESG investing goes mainstream. Sustainable stock indexes rise. Green bonds cross the $2 trillion mark. What began as a niche idea is now one of the fastest-growing sectors in global capital markets. Because the clean economy isn't just built on solar panels, it's built on capital. So how does green money actually move? Meet the toolbox. Governments and companies raise money specifically for eco-projects. Banks offer better terms if your project meets sustainability criteria. Capital is directed toward companies with strong environmental and ethical performance. Because ideas don't build the future. Capital does. The UN says we need over $6 trillion per year in green investment to meet climate goals. Green finance accelerates the energy transition, de-risks innovation, and turns sustainability into bankable deals. And most importantly, it pressures the old economy to evolve. Of course, not everything painted green is clean. Some companies greenwash, using eco-labels to distract from polluting practices. That's why we need transparency, independent verification, and global standards like those from the ICMA. Because trust is just as important as capital. Green finance isn't a trend, it's a shift in how we invest, grow, and define progress. It won't solve climate change alone, but it's one of the most powerful levers we've got. Green finance isn't a trend, it's a shift in how we invest, grow, and define progress. It won't solve climate change alone, but it's one of the most powerful levers we've got. Want to explore green finance deeper? We've curated the top tools, reports, dashboards, and learning hubs to help you dive in. This list is your jumpstart. Copy this list from the description below and start building your climate finance toolkit today.